Hi, I'm Mark from BookGel, and today we're going to talk about the 5 signs you're underpricing your accounting services. And over the years, I've worked with probably thousands of firms, and I've brought in over $100 million in payments for these firms. So I want to share today what's working, what's not working, and by the end of this, you should have a good idea of not only if you're underpricing, and I think you actually know if you are really, but how do you actually fix that? Okay, so let's start off with, before we get into these 5 things, I want to kind of talk about the mental game that it takes, right? So we're going to talk about how to flip the script in having your conversations with clients and prospects, right? So the first thing is you don't let clients try to piecemeal your services. You're going to have those folks that they come to you and say, how much is your bookkeeping, how much is your payroll, how much is it going to cost to do their personal and business filing. You don't want to get into that nitpicking thing there, because you're basically setting yourself up for lower fees. So at the same time, you want to control the conversation. So you don't let clients grill you. So what I mean by that is you set the pace, you set the cadence to these conversations. Think of it like this. They're not interviewing you. You are interviewing them to see if they are a good fit for your firm. So if you can make that change, that one change in your mindset, just to make sure that you are interviewing them, the whole ballgame changes. Okay. So basically, a lot of times, when I'm speaking to clients, it's you start the conversation with you're introducing yourself. Hi, I'm Mark, and I want to understand a little more about your business, and we work with a lot of businesses, so I want to make sure that we're a good fit for each other. So let me tell you how this works, right? So you say that, make sure you include that. Let me tell you how this works, because that sets the context for they know that, okay, they're speaking to an expert. This is not this guy or gal's first rodeo. So you set that context. Okay, and then you don't want to let them ramble. Instead, you lead the conversation. Again, you get into that flow. You get into that cadence. Now, sometimes you talk faster. Sometimes you talk slower. Sometimes you whisper if you want them to pay attention a little more, right? So there's a lot of things that you can use in that, but basically you want to set the lead on and pace on that conversation. Okay, and then most clients don't really know all that an accountant can actually help them with, right? They have no clue. There's a lot of, there's so many great accounting firms out there, but they have a hard time communicating the services they offer, right? And I'm not saying, it's like some accountants I work with, they're literally reading off of this pricing list, like 136 different services. Do you need that? Do you need that? That's not the way to go. That's not how you start that relationship. And we're going to talk a little more about that in a bit. And then you also don't want to give away free advice. That's a big no-no. I see a lot of accountants that are they want to show that they're the expert. So they want to maybe show off a little bit, and that's cool. Show their expertise. But if I'm working with an accountant, I want to make sure that I'm dealing with a professional. But you don't have to give away free advice. So what do I mean by that is, you don't want to spend 2 hours diving into details on your first call. What you want to do is be able to have a way to just understand and lead the conversation, but you don't want to go into that level of detail, because you should be charging, because they may ask you a few questions and it ends up, well, you just solved their tax planning issue, right? You spend an hour talking to them about the nuances of how you can actually plan. You feel like such an expert after the call. You feel like, oh my God, well, you know what? They're going to definitely hire me. They're going to need someone to do that, put that into action. And then you may never hear from them again, right? So think about that. Okay, so let's dive into the details. So sign number 1, you don't charge more as a niche accountant. So bottom line is, if you have a niche, you should be charging more in general, right? Businesses will pay more for specialists, right? It's the same reason why specialists tend to make more than generalists, right? Neurosurgeon makes more than a regular general surgeon, who probably makes more than a general practitioner, right? So the more specialist or niche you are, the more you can command. Now, a lot of accountants think like, well, I might be missing out on opportunities, right? If I lock myself in, let's say I'm in the veterinarian services, right? Well, then I might also have some construction clients as well, and I don't want to miss that opportunity. Well, don't think like that. There's ways to handle that. Okay, and keep in mind, not all niches are created equal, right? So although you should be charging a premium, some just tend to cater more to higher fees, right? So just some niches that are like super hot right now, like crypto and cannabis. The multiples we're seeing on that are pretty amazing. But that doesn't mean if you're in construction or real estate or any other smaller niche, that doesn't mean you can't charge a premium. So it's about delivering the value within that niche. That's another way to think about that. Okay, and niche experts get more respect. So not only higher fees, but more respect. So at BookJoe, we're software as a service company, SaaS. And I get pitches all the time from accountants that say, hey, we would love to be able to do X, Y, and Z for you. Now, I immediately discredit the ones that are trying to come in for a lower fee. It's like, oh, we can give you this discount before we even had a conversation with them, or we're a very low fee provider. You're automatically out of the conversation. I actually lose respect for you if you come in with a lowball price, and it's just to me, being able to show that you are an expert. That's not leading with price. You lead with the value, and we'll get to more of that in just a second. Okay, so that's number one. Number two, you accept piecemeal versus full service clients. So this is what I mean by that is this kind of coming in for like little services here and there. So that's actually an invitation to compare you based on price. They'll say, hey, so how much is your payroll services? Oh, okay. How much is your bookkeeping? Okay. How much is it going to cost for this tax filing? Okay. Your tax planning services. What about audits, reviews? You don't want to get into that nitpicky kind of thing. You don't want to get into an itemized kind of thing, because that is effectively putting yourself into a commodity scenario, okay? Which leads to the second point, packaging equals proactiveness. So what do I mean by that? So when you start to package your services, you can actually help your clients more, and they'll actually appreciate that a lot more. So what do I mean by that is, you have these clients that come to you at the end of the year, drop off their taxes, and then you file them and you see them again next year, right? That's not the kind of relationship to have, because it's reactive. They're dropping stuff off at the end. They don't give you a chance for any kind of like proactive services. So imagine this scenario. Instead of having them come to you at the end, you can actually do a lot if you have some sort of recurring relationship with them throughout the year. So you can save them a lot, right? So you're not just doing their tax filings at the end of the year, you're doing the proactive stuff, right? So when they come to you, you can actually pitch them on additional things like maybe your the prepayments and the deferrals, credits, opportunities, retirement. So you can factor all this in proactively, and that leads to more of a packaging, which you can actually start to really sell yourself based on that value and potential savings opportunities. And what we do at BookJoe, we live and breathe this stuff. We have software that does all this for you automatically. But the point of this video is to kind of give you some ideas on how you can do this yourself and how you can actually think about this. Okay. And work with referral partners to fill the void. So, if you're a full service accounting firm, great, full stack, you offer everything, that's fine. If not, maybe you want to have some kind of way to fill in that void, right? So maybe if you're a tax shop, you work with a bookkeeper, or you work with a financial advisor, or you work with payroll specialists. If you're looking for a partner, in fact, we actually have a Facebook group that we have our BookJoe folks in there, our BookJoe accountants, and they're looking for different opportunities as well, working with each other, referrals. So you can click on this link here, and you can go. Happy to have you. You can find a lot of resources. The point is that if you don't have the service, you can partner with someone first before you kind of learn the ropes, and then decide to bring it in-house or not. Okay, so that's point number two. So number three, you rarely raise your fees. Think about it. When is the last time you've actually raised the fee? Or more importantly, do you have a plan or strategy for raising the fee? Is it just a few points every year just to adjust for cost of living? I hope not. So let's talk about So we have this down to a science. We live and breathe this stuff. So we've created something called the RAMP formula, and that stands for relationship value, ability to pay, money savings, and potential fee upside. Okay, so what does that mean? So the relationship value. So you want to price based on a few key factors and raise the fees based on things like how many years have they been a client of yours? How many years since the last increase, if ever? Are they in a particular niche or not? All right. So you want to factor that in. And what I should have probably added as well, which we actually factor is PETA, right? How big of and I'll just do this now. How big of a pain are they, right? So you definitely want to understand that as well. Okay, and then what is their, secondly, what is their ability to pay, right? So revenue versus profit. I mean, at the end of the day, you should be charging less in your fee that you're actually being able to save them. That can't happen all the time, of course, if they're maybe a newer firm, or they're venture back. They're just not pulling in the actual revenue or profit at that time. But you should try to have a situation where if they're not bringing in the money, then of course they can't pay you. So you want to make sure that that's in tune. Money savings. So we see many different practices that are charging in various ranges. So just as a rule of thumb, you can charge based on profit. You can charge based on revenue. With BookJow, we have over 50 different factors that we base pricing on automatically. But just a simple rule of thumb, if you're a full service accounting firm, you're probably saving somewhere between 15 to 30% of that company's profit, or about 5 to 10% of revenue. That's how much you are being able to save them as a full service accountant. So if you ever done the math, if you've ever done like some sort of regression analysis with your business clients, this is kind of what you're going to probably see based on that range. Like I said, there's a lot of different factors, but that's you want to make sure that the money savings is there, because if not, it's going to be harder to raise those fees. Okay, and then potential fee upside. So what is the impact the small increase means for firm valuation? So you may be increasing the fee, but it doesn't also benefit them, but it should benefit you. So what is that fee actually worth to you as a firm? And I'll actually dig into how we think about this. Okay, so that's basically the RAMP score. And just to kind of give you a quick idea, this is the BookJow software, and it's kind of sort of like one of the components of it. Basically, we show you this RAMP score. So with BookJow, you literally are able to enter in your existing clients, and we give you a go, no-go decision on if you should increase your fee. If so, by how much, why, what factors are involved, and what does that mean in terms of a firm valuation? Okay, so in this case, it says, hey, you know what? This particular client is a stellar opportunity for increasing your fee, right? And because all these factors are green, the relationship, the ability to pay, the money savings, the potential fee upside. So it's saying basically, hey, you know what? Proceed with a fee increase now of $350 a month because your current fee is 54% below industry average. So this is our big data. If you haven't seen BookJow, you can Google us. We're in every major accounting publication out there in the U.S. at this point. But this is basically our bread and butter. So we know what that data is. We know what national averages are across the board. We know how much you should be charging in a multitude of different situations. So it's basically saying, hey, you're charging $300. You should increase it by $350 a month, and that's your suggested new fee of $650 a month. Okay, so then we kind of go into the details of why. And the one thing to keep in mind is, what that means for your firm, right? For your accounting firm in terms of different variables, right? So if we kind of dig into the actual potential fee upside, well, this is the upside analysis that we give you, right? So it's like, all right, well, $350 a month might seem small, but that is worth $4,200 to you annually, with a 5-year upside to you of around $21,000. And if you're ever looking at selling or exiting your firm one day in terms of a firm valuation, I mean we're seeing multiples across the board, anywhere between 0.7 to almost 3x multiples, depending on a lot of different factors. I'll probably do another video on valuation later. But the idea here, so assuming about a 1.5 multiple, that's worth about $6,300 to your firm. So over $27,000 increase, that small increase of $350 a month for that particular client. So imagine you're able to go through this, rinse and repeat across the board. Now, of course, you're going to lose some clients. If you have 100 clients, you may lose a few. But the idea is that you'll more than make up for it in the price increase with those customers that remain with you, and you'll have less of them. So what does that mean? It means more revenue. It means less client base. And at the same time, probably getting rid of those PETA clients as well. Okay, so that's one way to think about it there. Number 4, you think you'll get bonus work later. It's like that doesn't really happen. I mean, sometimes it would. Great, maybe you can upsell them or cross-sell them a little later on, but it's important to set the expectation at first. So we call this the get them in the door syndrome, right? Where it's like, I'll get them in the door and then we'll kind of see if we can increase them a little later. No, so what we recommend is, not doing that. You want to set expectations up front, so effectively when you don't want to train them to expect discounts, right? Where you're closing for a big discount, or you're first 4 minutes of the conversation you're already talking about your fees or you're talking about discounts. You don't want to get them to you don't want to train them to expect that from you, because then they're going to always question your fees. They're going to nickel and dime you. You don't want to be in that situation. And the truth is, most businesses have no clue what other services you provide. We work with a lot of accountants that they started with like these massive checklists and pricing lists. And I mean, imagine for a business, they're going through a conversation and it's like an hour and you're going through like this checklist. Do you need this? Do you need that? Do you need that? How about that? Let's look at these forms. Like, businesses don't want to be treated like that, right? Because that makes you look like you're not a professional. And I understand you want to be thorough, but that's not the approach to do. So what you want to do is you want to be able to have a conversation with them, but at the same time being able to get your fee together. That's what BookGel does. That's what our software does. It helps you have a conversation while the numbers are crunching in the background of exactly not just your fee, but how much you can actually save them as a client. But the important thing is that you want to be able to be clear about the services you offer. If you're a full service accounting firm, you're not going to tell them about 137 services that you offer. You're going to talk about in key, different practice areas. Maybe it's planning, or maybe it's bookkeeping. You want to give them a general overview, but you want to be seen as that go-to guy or that go-to gal, basically, so you can let them know that you might not be able to do it all, but you are that person that they can come to, and then you can partner with other folks. So that's basically how you tee that up. Okay, so then finally, actually, you don't control for scope in your engagement letter. So if you're not sending out an engagement letter proposal, I highly recommend that you do that. In fact, we live and breathe engagement letters. If you don't know me already, I'm the co-founder of BookGel, but I'm also co-founder of BizPayo, one of the largest payments providers for accountants in the U.S. today. And I literally wrote the guide on engagement letters. And I'm going to include that in my notes below. If you look at the notes, I'll include a link. But basically, I wrote this guide not too long ago, the best practices guide to engagement letters for accountants, including 25 plus examples. So I'll pop it in the comments. You can grab it. Hopefully you'll find a lot of value in that. But the idea is that engagement letters or proposals, it makes it easier for upfront or recurring billing, right? So you can be, if you're able to set the expectations for upfront billing and recurring, that's a lot better and easier for them to handle and budget for versus some sort of ad hoc or hourly. So engagement letters help you do that and craft that language accordingly. Stop having 3 or 4 meetings before closing. Just ask the right questions, include the right scoping language, right? So a lot of accountants we work with, they have 3, 4, sometimes 5 meetings before the client is actually closed, assuming they're actually qualified, right? So a lot of the accountants that are using BookGel, they're able to close on that first conversation because we tell them exactly how to ask the questions, what to say. Most importantly, we believe in separating the sales closing process from the onboarding process. The onboarding process, you're going to go through a lot of your due diligence. You're going to connect to the books, collect probably your tax returns, a lot of stuff, a lot of due diligence stuff. But at the end of the day, when you scope it right in the beginning in your engagement letters, you set the context, right? So for example, you want to include some sort of scoping language that effectively says, so this fee is based on the conversation that we've had today. However, if we find that this information is inaccurate or it's out of scope from our original conversation, we reserve the right to adjust the fee accordingly. So basically, you set that language up in your engagement letter. Again, you can steal our engagement letters. We have 25 examples and counting. I'll include the link below. But that's really it in a nutshell. These are the 5 signs you're underpricing your accounting services. Now, if you think you're underpricing, if you suspect that you are and you want to figure out how much, we love to help you. In fact, we have a little quiz on our site. If you go to bookgel.com/quiz, enter in some basic information, and if we think we can help you, then we'll reach out and give you an opportunity to schedule a call with us, and we'll love to learn a lot more about what's going on in your situation today. All right, thanks again. My name is Mark, and see you on the next video.